Apple is in the news. So we're going to break down a couple trades in Apple, a little bit based on my opinion, which isn't always very good in terms of direction, but we're going to look at them anyway. So let's get into Apple a little bit on the Brew. Bam. Hello, Molly.
This just in.
Do you have a heart on your sleeve?
Wow. I come with hearts. Happy Valentine's Day, everyone.
Very good. Happy Wednesday.
Yep.
How are you?
So good. How are you?
I'm good. Now, I must admit, you sort of suggested the Apple idea. Is that fair or not fair?
It is. You know, I know the Mag 7 get a lot of airtime, but I think I'd love to see people spread out their investments, and so maybe look at different companies that build the components behind the new Vision Pro and
right.
iPhones, etc. So, but yeah, I like Apple, and I use their gear. So, and I'm a value trader, and so I'm a thumbs up on Apple.
I am a thumbs up on Apple generally. Okay, so I have no issues with that statement whatsoever. However, how do I say this? However, Apple's had quite a run, right? So I'm looking at a chart now. So can we go to the chart real quick?
Yes.
Oh my God, look at that. So this is a chart of Apple over 365 days. It's a year of stuff. So here we are over on the right side. Do you know, if I had a drawing tool, it would be unbelievable. But we don't have one. So here's where we are over in the corner, about 185.5. Clearly have been higher. I've marked a resistance line up here right around 200. I got a little support line down here around 165, thereabouts. Okay, that's a bunch of malarkey, all that stuff. Anyhow, I just like to draw on the charts. So, we're at the top end of the range, I think. And again, as you said, I am a huge fan of Apple. I have nothing really super negative to say. I just have this belief I can't get rid of with anything, that when things run up too fast, too far, and
makes you nervous.
Yeah, right. It makes me nervous. And I don't even think a pullback in Apple is a bad thing.
Yeah.
I think it's potentially a good thing. So I am playing this to the short side a little bit. Okay, so we can go back to the two of us for a second. And what I mean by a little bit is I'm just not straight out short stock, straight out, long puts, because I think Apple's going to crater to zero. That is, in my opinion, not going to happen. So what I like to do with the positions when I have these opinions, and let's put the disclaimer on opinions. Everyone has one, the whole deal, right? But I'm just playing this to the short side for a little bit, right? Just down from 85 to maybe, somewhere 75, 70 is what I'm kind of shooting for. And I'm not actually thinking it's going to happen overnight or in a day. I think it could take, several weeks.
Right.
So I just set up a trade to try to take advantage of that. A very safe trade. Okay. And we'll look at that in a sec. Any comments from Molly, the Apple bull?
Okay. Well, yeah. So their stock dipped a little bit, and they missed some estimates and China weakness. There's some that news is flying around. But what was interesting that I saw today was I'll just read this out. Apple has won an exemption for its iMessage and Microsoft for its Bing search engine from new EU tech rules after the company's convinced antitrust regulators their services are not gateways for businesses to reach end users, which is sort of a big deal. So I think that came in just a couple of hours ago. So their Vision Pro just came out. We're going to go over that on Friday. I think it's incredible. It's a high price point. So not a lot of, push based on sales from that, because I think it's going to be targeting a very specific demographic who can afford it. But I do think it's the next gen, and the potential uses for that are are just limitless. And so I'm pro Apple.
You're
And
pro Apple.
I'm pro Apple.
And what's that thing called? Their new thing?
The Vision Pro.
Oh.
You have a prototype that's competing with it. That we're going to present.
The Oculus?
Yeah, we're going to present Lex's prototype on Friday. He has a green prototype, so stay tuned for that.
Yeah, wait till you see it. It's unbelievable. Not sure it does anything, but it's unbelievable. So are you a fan of this this kind of, what is it called? A VR, virtual reality.
So there's VR virtual reality, which is complete immersion. And then complete immersion means that you really are in a separate world and you can walk into walls if you're not careful. Augmented reality is where it takes your room and places screens in the air and apps, and people can walk in and be in your room, a bit like that Star Wars, Jedi meeting. So, and then you have Neuralink and Neuralace technology that's coming out, where it's called a deep dive VR, and that will access your senses through your thalamus, potentially in the future.
Did you say thalamus?
Yeah, pyramidal neurons. It's going to get crazy. So we're far from that, but that's the future of.
Okay. And I think we're talking to Paulina on Friday about this. Is that right?
Yeah. And she has a lot of news for us. So that'll be fun.
Okay, cool. So sounds like you're bullish. I'm short-term bearish. I'm shorter-term bearish, like next few months.
I'm probably, me, little CT scan here. Every time some good news comes out, stocks always dip a bit, and I kind of feel like that's so that the guys, the people can jump in, and so I'm probably short term bearish and long term bullish.
Okay, fair enough. I don't mind having a little bit downside play. Again, I think it's healthy for the stock. Any sort of sell off consolidation is probably pretty good. Things that go straight up or straight down, I'm not a fan. I don't like that. That's scary, especially straight up. That scares me. This market's been straight up since October, I think. And that somewhat frightens me. Now we're getting a little pullback today, I think, right? Pretty healthy ones. SPX is down 55 or so and change. So that's a pretty good move. That's beyond an ATR, I think, a little bit. But again, healthy. Go ahead.
If you were going to have a position on with your stance, what would you do?
In Apple?
Yeah.
Let's go to the remarkable, even though it's trade hawk.
Okay.
What do you think? Okay, so what I have here, and just to orient us all, you see some pretty colors. I'm looking at the option chain in Apple. Okay, on here. I am out in April. The regular expiration in April. That's all they have in April right now. It's 66 days away. Okay. So again, I'm not a massively long bull, bear. I'm giving it 66 days to do its thing. Okay. Now, one thing to note, I'm a trader. I'm not really an investor. So I'm looking to harvest profits, right? Yeah. So harvest profits means that I'm not in this for any long-term, I put on a position for a very advantageous price, in my opinion. And when it does its thing, and I'll talk about that in a second, what its thing means, I'm out. That's it. I'm done. I move on. Okay. Now, because my opinion is that Apple is going to have a little bit of a sell-off, nothing crazy. It's not, historic. It's not scary. It's not nothing. It's just a consolidation, in my opinion. I've chosen to go down to the 170 strike. Okay. So from where it's trading now, that's 15 points, right? From where it is now. So what is that? That's about what percent? That's about 8% down move-ish to get to that strike. Another key thing, I did a put debit spread. Okay, and we'll explain what that is in a second, versus a call credit spread. They're both bear spread. So if I'm buying a put bear spread, I'm buying a higher strike put, I'm selling a lower strike put. Can you see my mouse on the screen? I think you can.
Yeah.
So I'm buying the 170 put. I'm selling the 160 put. There's a $10 difference. Okay, that's what my position is right now. If I want to do the call credit spread, which is also bearish, we want the stock to go down, I would pick a lower strike. Let me just put this on the screen so you can see it, and buy a higher strike. That's going to generate a credit Okay. In this case, it's about $1, let's call it. Okay. I'm just moving it to $1. So the most I can make on this call credit spread is what I sold it for. In this case, it would be about $1. Any questions? Does that make sense?
Yeah. And so for any of the newbies out there, just review again how you would choose a credit versus a debit spread.
Good question. I was going to get to that, but you read my mind. Okay. So this comes around implied volatility. It's a little rule of thumb that we use. If I do a thumb up, I'm going to get that little crazy.
You are. Be careful,
Okay,
X.
don't do that.
It's illegal.
I know, right? So my rule of thumb, where you don't have to know much about implied volatility, you just have to know how to do mathematics, is that if the price of the option, okay, is X% of the difference of the strikes, then, and we'll talk about X's, then I'll do either a debit or a credit spread. Now, for the credit spread, I want the price of my spread to be greater than 40% of the difference between the strikes. For example, let's take $10 strike, which I have on the screen. The 200, 210 is $10 apart. 40% of $10 is $4. So my rule of thumb is I'd love to see a credit of at least $4 on that trade to consider doing the short call credit spread or call bear spread.
Okay.
Does that all make sense? Did I go slow enough there?
Yes, that was great.
Okay.
We need your remarkable.
I know, right? I can do that in a second, I think. Okay. So you can see it's $1. Is $1 greater than 40%? No, that's 10%. That's really cheap. So in this case, I don't want to sell something really cheap. So I would not look to sell the call credit spread here. I'd go to the other side of the ledger, the put side, and look to buy a spread. And therefore I have a debit. Okay. And you can see on my screen, I've got 200 contracts on this put debit spread. Okay. So what I did, I'm going to erase this call spread because I've just determined that it's not pricey enough for me to sell. I'm going to go back to this to this put debit spread. I'm going to analyze. I've got a $10 strike difference. 40% is $4 again. Okay. It's 75 cents. Let's call it. It says 73, but let's just pretend it's 75 cents. I think that's where I did it. Okay. So that's way, way less than 40%. So it's really, really cheap.
Yeah.
So if I buy this put debit spread, which I did up here 200 times, I'm going to pay 75 cents with a maximum reward of $10 less what I paid for it. So $9.25 is what I can make on the spread. 75 cents is what I can lose. Remember, I have an opinion that I'm acting on to get short. This spread is a short delta spread, right? Every time I do it. And if I do, let me just put 200 in the ticket here. You can see me doing this.
Yeah.
Right. So it's 1,500 deltas short. So every point we go down, it's like feels like 1,500 shares of stock going down. So there's some good potential. I can make a lot of money on this trade. Now, what am I hoping for? Okay, I'm obviously hoping, number one, I'm hoping for a down move, right? That's number one. Number two, am I hoping for zero? Not really. It doesn't matter to me that much. It would be, wonderful. I'd make more money, I suppose. I don't even need this to go to in between the strikes. So let's take a look at this, okay? So in TradeHawk, if I hit this calculator button right here, okay, it's going to pop up a little mini calculator of things, right? So I've got I'll put 75 cents in here. That's where I did it for. I got 200 in here. The stock's currently trading at 185. So what this thing does, it says, okay, let's move this down to, let's say 170. That's my long strike. I haven't even gotten into where the real honey zone. I'm just at the top strike. Look what the 75 cents does. Okay. If I go to 170, it goes to 295. So it goes from 75 cents to 295, right? That's almost a triple bagger, right? Pretty darn close. It actually is a triple bagger.
Right.
So it's a big percent return, great return on this thing. And you can keep playing this game forever. If I go to 160, right? And that's on today's date. Now we can change dates too. Goes to 546. So that's a huge, huge return. So I don't even need it to go down to 170. You can keep playing this game forever, right? You can keep putting different prices in. 175. Do I make money? $2 versus 75 cents. I make $1.25, right? That's a good return as well. That's enough to consider to be getting out of this.
This is an incredible scenario tool.
It's awesome.
This is priceless.
And not only that, you can change dates. So you can do it over time and see how theta affects it as well. So it's really pretty cool. So this was the analysis I went through. I did look at implied volatility. I did it with a thumbnail by just peeking at that spread differential. 40% is kind of my thumbnail. Now, will I do 30% on a credit? Again, I'm a big fan of using the analogy. It's like dropping grenades. Get close. It's not brain surgery. You don't have to get it exactly right. Just get in the ballpark. You're gonna do enough damage if you're close, right? Any questions on this? Does this make sense, Mal?
Yeah. Where does one get in trouble here, and what does one do?
Yeah. So where one gets in trouble is if the stock just keeps going up, never makes its way down. Time rolls on. The spread starts getting more closer and closer to expiration. It's going to expire worthless if it's out of the money, right? And you're going to lose your 75 cents. Don't forget, the most you can lose is 75 cents in this example, right? Because that's what I paid for it. That's all I can lose. So that's my risk. And you lose that if it doesn't, by expiration, it doesn't go beneath that 170 or it goes up from here. You get it, right? So in my mind, I've got to stop. And, I'll probably stop this out at 25 cents as time goes on or the stock moves and I don't get anything. I'll probably save myself that last quarter and just get out of it. And maybe if I'm still believe in the short move, I'll move it out in time. But I've got 66 days to think about this, right? The spread's not going anywhere. I'll give or take a dime here and there, 25 cents tops. I'm waiting for the move.
Okay.
Now on the credit spread, let's talk about that quickly and we'll wrap up. My risk profile is a little different. Remember what we did here. We were looking at the 200, 210, let's say, just to argue. And let's say that's right around $1, right? So what I can lose is not the dollar. That's a credit. That's what I can make. That's the most I can make. I can lose the difference between $10, the strike difference, and what my credit is. So I can lose $9 here on this one, right?
Yeah.
Not as fun.
No.
Okay. And that would happen if the stock goes up above 210 by expiration or makes a pretty good move beforehand. It won't go to the full value until expiration, but you'll get hurt pretty bad.
Okay.
Make sense?
Yeah.
Okay. Bueno. I think that's it for now. This is my play. Again, I know implied volatility from a more statistical standpoint and from a historical standpoint is very low. Let me hit that real quick. I'm going to go to the volatility tab. Let's take a peek at this. Sorry, Max. So we go back to the 60-day vol, which remember our time was about 66 days. So I'm looking at the 60-day vol. It's 17 days. It's pretty low. Let's look at IV rank. I mean, it's down 20%, and in a 30 days at 12. I mean, it's just so cheap. This is another tool we use to see where relative implied volatility is. And I look at this a real lot. Okay. When I'm trying to analyze something, I just know intuitively about Apple because I trade it so much.
Yeah.
So I know this is a really low implied volatility. I already know I'm going to do a debit spread. I didn't have to do this analysis.
Yeah.
But for newer people, it's nice to see how this can line up and you can get yourself in the right position relative to pricing. Okay.
And just last question, just speak a little bit to that. So, for someone who's just starting to trade, you can get familiar with how a stock moves. You do, and you can recommend maybe people just stay in what they know in the beginning.
Yeah.
Would you recommend that, or would you?
I would. Yeah. So, when I grew up in the industry, we were the market maker side. We had a bevy of products that were assigned to us, right? So I became an expert in those products. I didn't become an expert in anything else outside of those products because that's all I traded.
Right.
So analogously for the retail trader, what would be great is to have a little basket of stocks that you'd like to trade. It can, you can have SPX and VIX in there. I don't care. And if you trade Apple and Tesla, whatever they are, become an expert in them. Yeah. Understand their implied volatility, what's high, what's low, right? Understand, kind of price ranges from a chart to some degree. If you have opinions, wonderful. There's really clever ways to get long and short using options and spreads. I'm a big fan of that. And once you become an expert in a good handful of stocks, you can move yourself in and out of positions, right? in those stocks based on what your opinions may be or your data shows, right? And then you're going to know high and low volatilities, implied volatilities as well, which is also super helpful. Anytime you can put massive amounts of edge in your favor, you're in the win column. You're starting to put the odds in your favor. That's what you're always trying to do here. Okay.
Edge. And then, your scenario tool is so amazing. What would you recommend? So let's say this Vision Pro is coming out and you want to see how historically each announcement of a new product, let's say the iPad, the iWatch, how stocks perform. Where would one go to look at those historical repercussions of?
Yeah, so that's good. I'm going to give a buddy of mine a plug here. He's the owner and founder of ORATs. He does a lot of options back testing. Feel free to plug endlessly here. So he's great. It's ORATs, ORATS. Then they have their own pricing model, but they're a great historical back testing sort of thing. And they've got just reams and reams of data. And I'm probably sure that you can match up releases of new products in Apple along the way too. He probably has that mechanism as well.
Okay,
that's a great spot as well to see that stuff.
Okay, brilliant. Thanks, Lex.
Cool, Mal. All right, let's wrap her there. We're gonna call the trading day close there. I'll keep you posted on this. On Wednesdays when you and I talk as to how this is coming along. I don't expect much, anytime soon necessarily. We got a pretty good down move in the market yesterday on Tuesday. So Apple is down a little bit, but nothing much. The spread expanded a little bit, not enough to take it off. And incidentally, before I go, I like to start taking things off at 50% profit, meaning if I pay $1 for something, when it gets to $1.50, that 50% of $1 is 50 cents. When it gets to $1.50, I'm looking to take things off.
Okay.
And there's a bigger algorithm there in my head, so we'll talk about that next time.
That sounds juicy. All right, thanks, Lex.
All right, Mal, it's a wrap. We're gonna close her down. I'll talk to you next week.
All right, bye.